The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. How's everyone doing today? Give me a Y if you could hear me clearly. Just set up my stuff yesterday. Okay, that's a good sign. Ping pong. Hello, Paul. Everyone doing okay? Hi, John. Okay, so I have a few thoughts coming into this week. We all know that the yen broke out last week, over 110, 111, whatever you want to call it. But I do see the potential for something counter trend maybe tomorrow. A little third drive forming. Maybe we get up to 1220. Why can't we pull back to the breakout? If it is a breakout, that's going to happen down here around 111. And why not see 110 again, which is really where it broke out. The acceleration was over 111.40. So I'd be careful being long the yen here. And as you can see, I didn't do fibs here, but this was a pretty important breakdown level right here around the 112 level. So we'll see. Maybe we get some type of inside day today, but potentially a scalp. A lot of upside momentum in the 4-hour and the daily. So those aren't lining up, but the 1 hour is, which tells me if you're going to go counter trend, don't look for a lot. You need a lot of the different time frames to line up and be saying the same thing, giving you the same message for it to be major. You need at least the daily and 4-hour and the 1 hour. So it normally takes less time to get these 1 hour time frame divergences. And at new highs, it looks like we're going to get it. If you notice the RSI sitting right here, I don't think we're going to trade over 70 if we trade up towards 1210, 1220. Everyone with me on that? Give me a Y if you are. You don't have to agree with me. I just want to make sure that you're learning while you're hanging out with us. Euro, this is going to be a pretty important level. Last week we talked about 14, came off pretty good. So I wouldn't get short into the hole here. Although, we could have a breakdown this week, another negative day, but need, 1250 to really consider it a breakdown. And the fact that Euro's weaker than cable again reinforces that's the preferred short. I know Blake and a lot of people have nice core positions in Euro Pound. That trade is working again. Congratulations, team. Want to point something out. I was wrong here. I thought last week we had a chance for a reversal week, and Friday changed all of it. But you know what? Today is giving me some information. I'm not an Elliotician, but I do know that this level right here that we just took out was, the 1 hour shows it the best. So it kind of had like a double top here at 71.60. Wouldn't be surprised if some Ellioticians are calling this a 4. And sometimes you get the terminal thrust out of a 4 to new highs. I'm not saying this is a high yet, but I will say this with a high degree of probability. If we start trading back under and closing back under 7163, that's going to look like a false breakout. This happened last night. I don't know what fired it up. Did we have a China deal or Kudlow talking it up? So really news-wise and everything, Blake knows he made a move recently. You're discombobulated for a few days, especially when you're real old into it. Right, Blake? Like me. So anyway, this is going to be a line in the sand. If you've been long, congratulations to you. So, I'm hearing people talk about 2850 or so in the S&P now that it's taken out 2811. We'll see. I don't think the 1 hour did not confirm up here on this spike, and the Dow's been the weak sister. So let's see. We do have 4 hours that it did not negate. See, diverged up here. So we'll see if it has 28.5 in it. I would say your first warning sign would be back under these highs here, 2800, which were 14 handles above. So wrong about stock indexes last week, but right about oil. Okay, so we had this real big break in oil. Talked about this, I believe it was Friday, that this could have been a stop hunt, that we just took out the highs where everyone had their stops just above the high by about 15 points, and then really got hammered Friday. So I think there's potential of a bear flag setting up here. New highs in the stock market, lower highs in crude. That's another, short the weakness. So I'm thinking up here around 630, 650. Should be the end if this is going to be a flag that measures much lower. So 57.5, call it $2. And then if we break down over 5.5, it's going to take us to 3.5. So looking for shorting opportunities, maybe both the yen and the oil happen on a turnaround Tuesday. I do not know what to do with precious metals, but I did want to touch on, I know Greg has been short. I don't know. Let's see. Let's go to the best team on the net. Without question, best team on the net. And my stuff isn't in here, so it's the best. Okay, so let's see if Greg is still short. Yeah, look at this, up 3%, got short up here. He's looking for 1270. Okay. What great trading. Look at this, guys. I don't know why anyone wouldn't be a member. Well over a 50% hit rate, and risk to reward ratio is 3-to-1. So great call by Grega, nice trade by Blaker and CAD, and Blaker and Euro Pound. So you really have to consider at least the trial, and I recommend minimum 3 months to be able to see what's going on and immerse yourself in our community and the private chat room where you're going to grow as a trader. I teach surround yourself by traders better than you. Next month, it'll be 2 years since I walked the talk and surrounded myself by a group of traders that have that elevate your trading. So great opportunity for those that are interested in learning how to trade to be with us. And we have a lot of pros that really, they could trade on their own, but they see the advantage of collaboration. You've even heard Blake say that a lot of his great ideas, are kind of masterminding with guys that he's been trading with in private chat for many years. So, you want to take advantage of that. And, I think we're the only ones here that on the net that really include experts in each of these technical disciplines, Grega and Andre and Blake and Steve and Stelios. So consider doing this, and I'm going to wrap it with Bitcoin, Blake's favorite, Steve's favorite. So we've been in a little bit of a corrective pattern since a high up there at 4,300. And I think we have to start to make a stand here. So if you look at the 4 hour, we've kind of had, the first flush, the second flush, and here we are. We haven't taken out this low yet, but I'd be looking for, here you have a 1, a 2, a 3 for the third drive. And I'm thinking that it's good or bad from this area. I don't think we should trade back under 35.48, the old 61.8 retrace. So that may be setting up, if you feel bad because you missed this or you missed this, that Steve Volge was on through Ethereum. Okay, Steve's playing with me right now. So watch the cryptos down here. Ethereum, same type of picture. So that's my view on cryptos. Was this just a failing rally, another failing rally for new lows? I don't really think so yet. I have to give it the benefit of the doubt. We've had 2 successive higher lows on the dailies in these. So I think someone from Nigeria, I have to go now because they've offered me in an email. For some reason, I've become the benefactor of some prince's estate, and all I have to do is send my banking information and wire and my social security number to someone I don't know, and they're going to send me about $1 million. Yeah, Zig, you've got. Oh, I better get going before before someone commits fraud on you first. Okay, everyone. All right. So a lot of money out there to be given away if you give away your your private information. Here, I'll pass it over to someone that that's how he got his start, from an email offering gazillion of dollars. Blake Morrow, one of the best in the industry. And I know people have been following Blake for Morning Edge to hear it face. And good morning, Blake. I'm a little discombobulated.
Yeah,
Uh,
how did your move go?
I haven't unpacked, and I was,
Yeah.
you know what I mean.
I feel you.
Yeah.
I still have a full garage full of stuff. So yeah.
Yeah.
Yep.
So yeah. Anyway, those are kind of my thoughts, and uh, don't put me in the corner with a dunce hat. I didn't even have time to listen to the week ahead video.
Oh
So
man.
I'm glad I'm here because now I get to hear what I didn't hear on the week ahead video. So
Well, if I have to give you a quick recap, it's we were looking for a little bit more dollar strength,
okay,
and so that obviously guns blazing this morning. The dollar's making some headway. There's a couple of pretty key developments right at this moment. We've got the U.S. dollar Canadian that we're playing to the upside. It actually hit the neckline right now of the inverted head and shoulder pattern. So if you're long, you got to be a little careful here. I picked up some dollar MEX overnight at 1927, just added to my position because Mexico was downgraded on Friday. We gapped. You can see we gapped up right here on Sunday. We dipped to 1927. I picked up a little bit more, and I just sold it this morning at 1936. What I picked up, and so I'm looking to reload even more when we get back to 1930. If we get back to 1930, I shouldn't say when. It's more of an if. So that'll be good. The dollar Canadian continued its rally. We gap lower, and then we moved up overnight, filled the gap, and then but we are challenging the neckline of the inverted head and shoulder pattern. Remember, this is a complex inverted head and shoulder pattern because of the lower right shoulder than the left shoulder. So we're going to have a cockeyed, if you will, neckline. So that's why we're where we're at. Do I think we're breaking higher? Yeah, I do. If you bought right now and closed your eyes and open them 3 weeks from now, do I think we're going to be higher? Yes, I do. Does that make that the best trade at this moment? Probably not. I think if you're patient, you might be able to get a better price. And I'm hoping that we get a dip back down towards 132.50, 70, somewhere down here, and allow us to reload. I'd like to get a little bit more size on the dollar Canadian, actually. So, but I think you have to be a little careful with longs at the moment. We were talking about, since you missed the week ahead video, we were talking about the failure of the 50% retracement in the euro, and that the dollar looked like it was going to gain strength. If it gained strength, you got to look for the US dollar Norwegian krona to break out. We broke out. So the US dollar Norwegian krona, we actually gapped lower yesterday, and if you would have picked it up right at the open, it's significantly higher.
Wow.
Yeah, significantly higher. Also, the US dollar Swedish krona, same type of situation. If you picked it up on the gap down, it made a nice move up. I still think the dollar is very constructive here, and it looks pretty good. Now, does that necessarily mean that that you go out and run out and buy dollars right at this moment. No, I don't think so. But I also talked about the outperformance of the cable and said, you could try to play the pound to the downside if you want, but the better trade is probably just going to play some of these pound crosses, and that's where I'm at. So I am short the euro pound.
Still milking it, huh?
Yeah, well, yeah, I actually on the spike up on Friday. So this
Nice.
when we spiked into 86.20, actually that spike right there at 86.20, right here, I was napping. It was an hour before the stock market closed on Friday. I was so tired, and I said, I told the guys and gals in the chat room, I'm done for the day. I'm going to go take a nap and basically see you guys over the weekend or after the weekend. So right at the close, like literally while I was napping, it ripped up above 86.10, tagged the breakdown point. Yeah, tagged the breakdown point. This is just tagged it on a Friday, and then reverse. And by the time I got up, the stock market had already closed. FX trading was still open, and I'm like, oh, that was great. So I stepped in a little bit more in the euro pound, not at the highs because I was sleeping, but I stepped in just before the close. I stepped in a little bit more short at 86.05, like right probably around here, and yeah, so I'm just continuously trading this to the downside while we're below this 86.25, 86.30. Now, right now, what we're doing is we're consolidating in a downtrend, and we're consolidating below the support. So if the euro pound plays out the way that I think it's going to play out, it should play out like this. You got a bear flag, and we're going to eventually drop through this number. Now, there is a lot of Brexit news coming up throughout the course of the week. We have, and so there's going to be a lot of, in my opinion, jockeying around these levels. So you got to be a little careful. I think this is the time where you want to be more targeted in your entries and be just a little bit more careful in what you're doing. So I don't think you should be chasing the market around here.
The last low on the 4-hour did not diverge, Blake, just as an aside. So that kind of continues to build your case. There's no divergence.
I'm sorry, what would you say?
The RSI confirmed the last low, so there's still no divergence.
Yeah. That's a good point. Yeah, this move lower here, we moved lower in relative strength, so there was no divergence. That's confirmed. Yep, it is a confirmed low. So that's a good point. And I do believe we are going lower in the euro pound. You just got to be able to, like I think in this case, you want to sell it above 86 pence if you can get it. If you can get 86.05, and I am trying to trade around a core position. I actually took some off a little while ago when we were down at below 80. And I've still got a nice core position. I'll sell a little bit more if we get above 86. I'm just kind of working up a core as I think we're eventually going to break down. So that's what I'm doing currently with the euro pound. Let's see what else. Some of these. Well, I'm not going to go through the euro crosses. I don't want to. Oh wow, look at this. Crude oil just spiked. It's spiking higher. This is if there's going to be one thing that's going to drive the here's Canadian excuse me, crude. If there's one thing that's going to drive the Canadian back down below 133 is this crude oil. If crude oil continues to work itself up towards let's say 56.50, maybe 56.80, then hopefully that drives the dollar Canadian as we're looking at it back below 133, and gives us an opportunity to to buy it a little cheaper. Oh, there's let me pause my screen really quick. There was a piece of news over the weekend regarding Canada. So let me read this to you. Let me find it really quick. I'm gonna now I can unpause. I had to grab my emails. There was, oh, here we go. In a major blow to the Canadian oil industry, Enbridge expects its Line 3 pipeline to be delayed by a year. So that is a, there you go. Here it is. That is also going to have, you know, some negative consequences and already slowing a Canadian economy. Canada's GDP numbers were extremely weak. Oh, and by the way, you know, obviously on Friday, I left you before the GDP numbers. I had a long dollar Canadian. I took mine off closer to 132, and I left, well, you know, about 100 pips on the table. That's always nice, right? But I had a big position, so boy, if I would have kept that position all the way through, you know, the end of Friday, it would have probably made my entire month. But it, you know, I took some good money off the table regardless. But anyway, I think the dollar Canadian, this is the pair, one of the pairs that you want to play to the upside, especially with this week. And if you talk about this week and what's happening this week, we do have the Bank of Canada on Wednesday. So on Wednesday, we're going to have the BOC. And so if you know, Polis is a little bit more dovish, I think that's going to be the nail in the coffin of the dollar Canadian bears. You know, it's going to put us back in this. Whoops, I didn't want to do that. It's going to put us back in the upper end of this this channel. So anyway, I'm looking to play the dollar Canadian long more aggressively. I will look for a dip today if I can get it. So that's kind of what I'm looking for. All right. As far as one of the reasons why stocks are so strong this morning is that there are indications, and it seems more increasingly likely that we are going to get some sort of deal with the U.S. and China. The markets are looking that there's probably going to be a signing ceremony, possibly occurring between the Trump and Xi meeting on or around, you know, March 27th. So hopefully we can get this wrapped up by the end of this month and put some more volatility into the market, because one of the reasons why the market is so dead right now is because everybody's waiting for this China-U.S. trade deal to get done. Once it gets done, I think it's gonna open up for some volatility in the markets. So the market is expecting both sides to remove some tariffs and barriers that are blocking access to certain markets. So this should, you know, the market's already highly anticipating this, and it's already pricing it all in. That's the scary part. That's the scary part where the stocks are, where stocks are right now, is the stock market is already pricing in all this good news. Unfortunately, I think the stock market is going to, like the S&P, is going to break above this resistance, which is a shame. I think is, you know, because I think it's going to stop out everybody that's short, make one more move higher, because look at all this resistance right here, right? It's probably going to stop out everybody that's short, make another move, and then eventually roll over. So, you know, keep that in mind. If you're trading equities, we're probably going to get a continued lift in equities until the China trade deal is over. You know, we tried to, you know, make our way out of this ascending wedge, and I think it's probably going to continue up here, at least, you know, while we're putting together this deal. Once the deal gets done, then I think you have to start looking the other direction. I thought that would already have happened by now, but it obviously has not. Let's see, anything else that we should be? Oh yeah, the dollar yen. Dollar yen is pushing up towards some resistance. We have previous support from back here in the end of 2018. We're backing right up into that resistance. It looks like the dollar yen might even continue higher towards 113, especially if equities continue to be strong. I think that is it is a strong possibility at this point. Okay, and with that being said, I'm going to pass it over to my colleague Steven Stelios. But before I do that, I gotta say, if you're going to be a week from today, if you're going to be in New York or the New York area, make sure you come by and see us at the booth. I will not be there. I'd been kind of hanging on to the idea that I might be able to make it. My closing date for my home, it's either Friday of this week or Monday of next week, and that's not. It's I have no control over that. It's more of the bank. So, I was hoping that it was going to be a little earlier. So I'm not going to be able to make it, but that's all right. We've got, we got 3 team members that are going to be there. We got Joe Perry, who you guys see him on Bloomberg all the time, and Real Vision TV. He's going to be there. Steve, from Greece, obviously, that you'll hear him next. He's going to be in New York, and also Gregor Horvat, who is our Elliotician on our team, who provides all of our Elliott wave analysis for the markets. He's going to be there from Slovenia. So it's going to be a really, really neat event. Make sure that you do register so you can get drinks are on Steve, right, Steve?
Absolutely.
Drinks are on Steve. So sign up and let us know that you're coming so they can reserve you a seat to get free drinks from Steve. Steve's paying, so why not go and get free drinks from Steve?
From Steve, that's going to be using the ForexAnalytix credit card.
Well, you're gonna try to expense it when you get back from your trip, but it might get denied. I'm just saying. I heard from a friend that it might be denied your expenses, so it looks like it might be covered just by you. Anyway,
so not only you're not joining, but you're getting stingy now. Okay,
yeah, that's right. That's right. All right. Well, it may be it'll be on the company, but regardless, we'd love to see you there. For those of you that are in the area, and especially if you're going to be there, make sure you meet up with our team. It'll be. I can't wait to see the pictures, and I wish I could be there. So, good morning, guys.
Good morning.
Good morning.
Hey, real quick before I let you guys take over here, we have been. How many entrants do we have to the trade station competition? Roundabout, not like an exact number.
We have a few dozen, so I'd say 30 or something like that.
All right, so let's give them a couple more days, and then let's wrap this thing up and give somebody some some prizes.
Cool.
What do you say, Steve? How many days?
Yeah, absolutely. Let's do it Thursday.
Thursday, okay.
Because Friday I'm not going to be here. I'm going to be on my way to the airport.
So you guys wrap it up on Thursday. Give us a week to calculate everything, get the blogs together, do the analysis on who's got the best trade station, get the random winner, and then we'll announce it in about a week and a half's time after Friday, or so in about a week after we're done. So get them in by Thursday, guys. Get in all of your entrants by Thursday. You have 1 week, 3 days to clean up your desks and take a picture and tell us why you want to win. All right.
Thank you, Blake.
All right, guys.
Today, Blake.
And you guys have a great one. And I'm passing it over to Steve now.
Okay. Steve, before you start. Oh, sorry. He was going to say something.
Oh, it's okay. So I just wanted to ask, I saw, I get a lot of emails and stuff from, people that are traders and stuff. And one of them, I don't understand. I know you probably would. Why would someone want to buy USD NOK and sell USD SEK? Why would they want to short a pair like that fundamentally? Any idea?
So they want to basically go short
NOK SEK,
which is the opposite to what I would do. But
okay.
I mean,
all right.
I I haven't had a look at the short-term chart. Maybe there's a nice pattern or something.
I think it's a seasonal type of trade that they're doing. They do seasonals. I was wondering if they're running fundamentals because they run so similarly, the chart patterns. I was just curious if. Okay, so you would do the opposite. Why would you do the opposite?
I would be in the medium term. I'd like to be long Norway, and I've said this many times. So against
because of
Sweden
oil.
as well.
Yeah,
because of oil, because of everything, because of the way it's run, because of inflation. There, Norway's running high inflation as well. They're expected to hike. I think they might hike a little bit more than expected. So, but
it's not because Velo doesn't live there. That would be a Finland trade. But I was wondering if it had anything to do with that. People don't talk much in Sweden, like Finland.
Well, there you go. It looks like it's in a triangle.
Okay.
Yeah.
All right. Interesting.
Yeah.
Yeah.
All right. I'm done. I'm through. I was I knew you'd know. And
I have an opinion. I don't know.
Okay. Right. Same thing. And the reason why is crude, basically.
Yeah. One of the reasons. One of the reasons is crude.
Okay. All right. Thank you, Stel.
No problem.
Depends, of course, as always. That's very generic. Depends on the time horizon, Dale.
Yes.
So, for example, if somebody wants to be like short NOK/SEK in the short term, having seen that move higher, seeing this RSI divergence, seeing that we're getting close again to this trend line, yeah, it makes sense. But if their time frame is a long-term time frame, I think it doesn't make really sense here. You're either neutral in the long term here, or in the medium term here, or if you want to have a long term opinion, I agree with Stelios that then you have to look at the fundamentals. And fundamentally speaking, the NOK has various reasons for which it might end up overperforming the SEK.
Okay,
so
this is my question to you, Steve, after Stel is, I know you wait for confirmation, I'm bearish crude. Are you still, when you get to your charts, I hope you cover the crude and see what would confirm that we're heading lower. I think it's probably going to be a 55 close for you. That's just my guess.
Oh, yeah. I've said it many times last week as well, that in my opinion, we're currently like trapped between 55 and 58. Yeah. And, despite seeing some obvious loss of momentum, and Friday we also had like a key reversal. All that is good, but that's not enough to break, the uptrend that we had from the day after Christmas to Friday. We need more evidence, and, we need to at least close below 55, before we can start talking about a deeper correction. And I'm saying correction because we would still need more evidence to say that this corrective move higher is over, to actually call a top, to call a high. So I think we need to be more careful to do.
I bet Gregor would say that maybe A is ending, and that we'll get a B and then a C to new highs.
Very, very likely, because how corrections are. I mean, we had a very, very brutal move lower. But the market might need a lot more time than it needed to sell off to actually finish up correcting before we can likely resume to the downside. And I'm saying likely resume to the downside because this last leg lower was quite clearly impulsive. So, in the medium term, I would favor the downside. But in the short term, I would even favor the downside. But in between that, I think that there might be more upside before we actually roll over completely. So
because Friday was a pretty ugly day. It almost covered the whole week's range in one day.
Not as ugly as we had in the metals, because I think that the metals have now given us almost enough evidence to consider that we've seen the highs. If you remember, both Greg and I were actually looking for metals to top. We didn't actually believe that metals would keep going higher. And very well that I even have exposure to physical.
I want to give Greg a credit, and I hope you don't get jealous because he's great. But he had a pip on the short side of gold that didn't work, And pros, amateurs go, okay, I'm through trading gold for a while. I just don't get it. I'll look for something else. He recommitted to the pip and is cleaning up. So, sometimes it takes more than one probe to get it right. So your general
absolutely.
idea.
If you remember, I had two failed attempts in going long crude before I actually caught the bottom. Yeah, because if you have high conviction that something is going to happen, you know how it is. It's not like a perfect science. I mean, you have all the evidence that it's going to happen, but you might not.
You
get
never
the level
know.
first time. You
That's
might
why
not get the level the second time.
I came up with this: probe and protect. What do you think? Because you never know when the real turn is, but sometimes you have to probe it a few times before it manifests.
I'm not sure if we're talking about trading yet, but yeah, sure.
Okay, yeah, trading. Looks like I'm gonna have to throw that expression in the garbage can, because I know where your head's at. God, see, when you're in your 60s, you don't think about that all the time. But I know where your head's at now. All right, I like that. Probe and protect. All you young people out there, it doesn't. Even if you don't trade, remember that expression: probe and protect. All right.
Yeah. At least I'm young enough to remember. Although I've been with the same woman for 14 years, I still kind of remember.
Oh, you know what? That's no world record, Steve.
No, it's not.
All right, but you're working on it. Go ahead.
I'm 38.
For you, it's a world record.
Sure.
All right, guys.
Right. Okay, Steve. So before you start, just a couple of things.
Absolutely, Steve.
First of all, data-wise, we had some minor Australian data, some positive building approvals was better than expected, but company operating profits were worse. So overall, data was quite neutral for Australia. We had construction PMI in the UK came in at 49.5, so in contraction territory. But we've said this before. We said this before that data are becoming a little bit less meaningful now with the Brexit verdict coming closer. The other thing we had, obviously,
I'm afraid still that it's not going to come closer. I'm afraid that we're going to have some more kicking down the road, but let's see.
You could very well be right.
Which is disgusting because I'm already bored of this. I mean, it's just get it over with.
We've said it many times, but we have to follow it nevertheless. There was a Wall Street Journal article saying that the US and China are very close to a deal, as long as China follows some of its pledges, and then if that happens, which includes buying
if they have a little bit of brains, they will never finish this deal ever. It's a gift that keeps on giving. I mean, they should take it last for like 2 years. The market is going to keep rallying for 2 years. For a deal that has already been priced in.
There's only so much that the market can kind of price in. So yeah, you're right.
As it seems, no, Stelio. I mean, they keep. I bet that, in all honesty, Blake said that. If you remember, I had said it plenty of days ago. I do believe that there is absolutely no chance that no matter what deal they get, is going to measure to the hype. In all honesty, so I strongly believe that it's going to be buy the news, sell the rumor. I honestly believe that when they finally sign something, whatever that is, the market is going to be completely out of breath because
whatever spike happens on that day, just sell it. I think you're right. But anyway, the way it's being outlined is as long as China do what they've pledged to do, and part of it is to buy quite a big amount of US products, then the US will take away some or all of the tariffs. So that's what's been pushing equities higher. The other interesting thing, and something that I've read it again and again, I can't believe they're doing it, is Theresa May announced a measure, which is a fund, basically, I think a £1.5 billion fund for towns which have voted leave. So basically, I think it's called the Stronger Towns Fund, which is basically cash handouts for constituencies that have voted leave. And this
are you serious?
Yes, and this is. I mean,
is that even constitutional? I mean,
I don't know.
I know a decent amount of legal logic because my wife is a lawyer and I've had some legal stuff. How can you discriminate between citizens.
That's a good question, and it's not only
areas and.
But it's also clearly, I mean, in my mind, that it's like a bribe. You voted leave. Here you go. Your Labour MPs
yeah, that's more than obvious. But I'm trying to figure out how is that even constitutional. I mean, the first thing I bet a lot of people will do that are not, that do not belong in these areas is that they're going to go and challenge that. You know what I mean?
Yes, I mean, I don't know how this is going to work, but this is what's been announced, and I'm just reading it and not really believing it. But anyway, it's been announced, and so is it a bribe? Is it something? I don't know. You make your own mind up, but that's what has been announced today. And what else? Oh yeah, last one we had Euro PPI came in at 3% year on year, which is exactly like last month, and so nothing to write home about. And yeah, and so today's been quite light, but we have quite a few economic releases in the week and some interest rate decisions as well, which is going to be interesting.
Yep, absolutely.
There you go.
Okay,
that's it. No problem.
Hi guys, it's the new world order. We have a president that does the same thing. Same thing with what, Ziggy? By the way, oh yeah. But it's in general the trend. I mean, governments and parties become more and more populist by the year, literally. And I'm afraid that this is not going to end well. But it's whatever. I mean, we can just. Take notice, but it's not much that we can do about it. Anyhow, so let me start now the recap because we have quite a few things to talk about. One of them, and one of the important ones, and I have a few questions. And don't worry, I'm going to cover them all. I see your questions about USD INR, Nifty. We have Kiwi Yen, CAD Yen, metals. We're going to cover all of them. So first of all. Gold. Gold actually got rejected from this nice confluence of resistances at the 88.6% fib and this ascending channel resistance just before actually making it to the 1360 area, which would be key, as you see here, because this is like a large triangle. So that was like the line in the sand for the bears to protect, but we never made it here. And I have to say that this acceleration that we especially saw a strong evidence of on Friday with this huge black candle is evidence that this move lower, at least the first leg, has impulsive characteristics, which means that even if this proves to be a corrective move, you should expect it to have at least one more leg lower. So, we had already drawn all that and it actually worked out perfectly fine. So what I'm trying to say here is that if at some point, when at some point we get a rebound, let's assume that we make it down there and then we get a rebound, you should expect that even if this is a corrective move, it should produce at least one more leg lower. Bottom line, I think that clearly gold and, as we will see in a few seconds, silver are sell-on rallies. Okay, obviously, I'm not advocating you should be shorting them here, not because you can't or you won't probably make money, but because there is no real risk-reward ratio here. But, if we get lucky and we get a rebound towards 1300, I think that, that's going to be a good area to actually attempt to be short. Because, as I said, even if this is a correction, seeing that so far this is probably an impulse, a 1, 2, 3. We are probably in the third wave down. Should be a fourth, a fifth, and then we should see like a bigger correction, and then at least one more leg lower. So I do think that those metals are now sell-on rallies, and as you will see here, silver that was leading the way lower, and I say it was leading the way lower because it broke below this channel first, is the same deal. I do think that any rebound towards 1550 is going to be a great shorting opportunity. And if you notice, silver in general has been underperforming, so I have no reason to believe that it's not going to continue underperforming in the period ahead. That as it looks like the two main precious metals are going to be doing probably badly. At the same time, and unsurprisingly, we've had a big jump in the gold-silver ratio. So as you see, we never managed to break down below 81 and a half. We've talked about plenty of times that this was a key level for the bears to actually start moving this thing lower, and that was the only bearish scenario. So the fact that the gold-silver ratio is also doing very well points to the direction of the two precious metals underperforming. Now, at the same time, and not accidentally, we've had a big rejection and even a likely double top here for platinum. So if platinum turns higher from here, fine. But as long as it got rejected from there, we were expecting a reaction from there. Let's see what kind of a reaction it is, because so far it looks quite strong. Platinum also got rejected from there. So three metals that are showing the same thing. Now palladium is playing its own tune. It's much stronger, and copper is doing some pulling back. But I need to remind you here that copper has broken above a rectangle, and as long as this 287 area is holding, which we might end up retesting. I mean, we've seen that many times. I think that it's worth maintaining a bullish bias here. Anyhow, copper, gold, and silver are not that tightly correlated. I mean, copper can easily move higher while gold and silver are actually moving lower. So, that's no real conflict there. So that covers, the metals, which, have been giving us some nice moves. Now, let me go back to the DXY, because if you remember, I was looking and we were talking about that on Friday and I think on Thursday as well, that, in my opinion, the DXY has the potential of moving higher as long as we hold this broken channels resistance and support. And that's exactly what we did. So I have to say that, I'm definitely bearish the dollar in the longer term, but, I have no reason to be bearish at the moment. I've said that before. I mean, I'm not going to, my macro thesis is not going to actually, make me blind to what the chart is telling me. So the chart is telling me so far that, dollar still remains well bid. And, I think we need to respect that. I think it's very likely that we're going to make it up to this 97.75 area once again. And, if we do that, there's a very high chance that we're actually going to finally be able to break above it and push higher from there. So, this is what the chart is telling me, and that is what I have to respect. So, equivalently, Blake already showed the Euro USD. I have to tell you, I really don't know what kind of formation we have here because it's very choppy. Perhaps it's this kind of a triangle. But in any case, the inability of the Euro USD to move higher, given the previous move lower, should make you very, very skeptical. I mean, gun to my head, if I had to choose, being short or long, I would be short. Although I'd rather do absolutely nothing. I mean, why bother with something that is refusing to move? But if I had to, I would prefer to be short rather than long. At the same time, Aussie USD was attempting to actually break lower from this triangle on Friday. We are more or less still holding. So we're still we're still not confirming a bearish breakdown. Same deal with the Kiwi. Kiwi actually in the middle of this triangle. So what happens with Kiwi? I think it's it's quite clear that there's not much to do here. But there are two key levels that you have to keep in mind. One of them is like 67.20. The other one is 69.30. So I think that any move below or above that area should produce some follow through. In between, in my opinion, you'd rather sit on your hands and wait because there's not much to do about it. Aussie Kiwi has been stuck, but in my opinion, remains quite bearish. Don't forget that we've broken below a multi-year symmetrical triangle. Second of all, since this high over there, we've just had periods of downtrend and periods of consolidation. But so far, every consolidation has been a result to the downside. So I do think that as long as that's the case, you need to favor the Kiwi over the Aussie until proven otherwise. And that's useful if you're actually looking to have some exposure in Aussie yen, Kiwi yen, Euro Aussie, Euro Kiwi, or whatever. You know what to choose depends on which side of the market you want to take. Now, we had questions about Aussie yen and Kiwi yen, so let's have a look at them since we're talking about the Aussie and the yen and the Kiwi pair. So first of all, Aussie yen, I'm still short this. Why? Because we're still, for two reasons, three reasons actually, from a technical perspective. Reason number one, despite stocks and risk being very strong, we've completely failed to break above this broken triangles support acting as resistance. So that's the first reason. Second of all is because we had an RSI reading of 20, and despite the rebound that we've had, we've failed to even make it above 60 in the RSI. So that tells me that there is a decent chance that we're actually going to roll over and move lower from here. And the third reason is that this formation in general looks corrective to me. So given that the previous move lower looks impulsive to me, I think that the chances are for a continuation lower. So that's why I'm still holding this position, and they do favor the downside. The same deal, more or less. Kiwi is obviously stronger. There's no question about it. We were just having the conversation about Aussie Kiwi. So obviously, if you want to be short Aussie yen or Kiwi yen, you should definitely go for Aussie yen. But even if you're looking at the Kiwi yen, I would still not be buying it up here, right? I think that I would still choose to be short if I wanted to choose to do something. Although, as I said before, I would go for Aussie yen for my short as I've done, and not Kiwi yen. Another friend is asking also about the CAD yen. So let's have a look at the CAD yen. And here it is. I have to say two things about the CAD yen. I think that the CAD yen is a very nice shorting opportunity from a risk reward perspective. Why? First of all, because we got rejected for a second consecutive day on Friday from a very nice area. Why? Because the 61.8 of this move lower was here at 84.78. Second of all, because despite breaching through it twice intraday, we never managed to close above the 200 daily moving average. You can see it's currently at 84.60. And third, because this candlestick that we got on Friday is a very, very nice reversal candlestick. So the only thing that's left for this CAD yen to actually confirm that it's rolling over is a break below this channel's support. As you see, we tested it already today, and so far we held. But I do believe that if we close below this trend line support, we should at least be producing some decent follow through following that. So I think that the CAD yen looks like a nice shorting opportunity against Friday's highs, especially if we confirm with a break below that trend line. Despite dollar was stronger, gold was rising in last few weeks. Despite in a bullish move, it got a lot of hammer due to the dollar strength. So are we still targeting 1400 now after reaching 1270? Actually, no. As I said before, I don't know if you were here because this is the last question that came in. I think that even if the move lower in gold is corrective, it should be more complex. So even after getting some kind of a rebound, I think we should have another opportunity to be short gold. And there is even a decent chance, also from an Elliott wave perspective. Let me show you here as a freebie what Grega is looking for in gold. So if you're a member of ForexAnalytix, first of all, look at this. Both gold and silver, that's why we use traffic lights. As you see, we have a nice confluence of analysis here. All the technical types of analysis, candlestick, basic technical, harmonics, Elliott wave, all of them have a bearish bias at the moment, right? this is a very nice confluence of viewpoints, right? So let's go to gold since you mentioned it, and let's go to Elliott wave. And you'll see here that at the very least, Greg is looking for an ABC, what I actually was talking about before, if not a new 5-wave move to the downside. And if we go to the weekly chart, you can see that his viewpoint here is that likely this was the end of a bearish triangle. And that means that if that's the case, we should be headed a lot lower, lower than the previous low that we had. Okay. Of course, it's too early to call that. But as I said, irrespective of that, there should be more a weakness for gold and silver ahead before we can even consider the potential of more upside, which is very likely that it's not going to even come for a long period of time. Okay. So no, we're not bullish in any way. Actually, as you see here, and that's the reason that we built ForexAnalytix, to give people that want to be patient in their trading, to give them the edge, because trust me in what I'm saying here, when the vast majority of analysis that we cover shows in the same direction, we have a very, very high outcome.
We'll never get Stelios to flip to red, but you know what? Don't run red lights. When you're driving, do you run red lights? If you do, you're going to have crashes.
Listen, and I've said that many times. Our job in
Steve, you run red lights. I've heard about your driving.
Actually, I never run red lights. That's not true.
Okay.
I'm indeed a very fast driver.
It's yellow.
But I never. Yeah, that's a different story.
All right, and we have yellow up there too, which means sometimes the right trade is no trade. Yellow, right?
Yeah. So yellow means neutral. Yes. Yeah. So neutral. Why would you want to do something with neutral? Because neutral is like flipping a coin, right?
Like euro.
Yeah, exactly. So what I wanted to say here is that Stelios' job, and nobody's job in this company, is to agree with each other. That's the beauty of it. Since the beginning when we made the company, we said to each other that, listen, no matter what, we have to remain unbiased. We have to do our analysis the way we do it. And when it happens that our analysis confluence, great. But, we shouldn't let ourselves be influenced by each other's analysis, because the point is not showing all in the same direction, because, that's no real use. The point is to, show what we think. And when what everyone thinks points to the same direction, as you understand, the hit rate is very, very high, right? So yes. Gold and silver, as you see, all the types of technical analysis, and I stress that out. Why? Stelios, from a macro viewpoint, has every right to be bullish the metals. We live in a world that is now considered common practice in monetary policy to create money out of thin air. There is absolutely no chance that eventually prices are not going to catch up with fundamentals. And I have every confidence that gold and silver are going to be a lot more expensive at some point in the future. And when I say at some point in the future, I don't mean in 20 years from now. Will it be in 1 year from now? Will it be in 2 years from now? But I believe there's going to be another major bullish leg for the metals. Major. But you know how macro is, coach. Macro gives you a long-term direction, but it doesn't give you timing, right?
Right. Yeah.
That's why we have to.
I agree. Yeah. I mean, even if gold pulls back to 1350, 1320.
Even if it goes to 3 digits, if you ask me. Even if it goes back to 900, I will still believe that its price is going to more than double, at some point in the rather near future, if we're talking about, years of horizon. Yeah.
I just know a lot of people that called the top were looking for, Jim Welsh, Greg, they had, that this is going to be an E wave down to about, I don't know, 1250, 1220, and then expecting an even bigger wave than we've had already. Anyway, that's, the shorter term look that'll tie in with macro down there.
Yeah. So anyhow, one thing is for sure, we're looking lower for the metals in the short to medium term. There's no question about that. And as I said, I have very high conviction that rallies should be sold in both those metals. And since we talked about the gold-silver ratio, I think that being short silver, because we know that when the metals underperform, silver is doing worse, is historically speaking, because nobody can guarantee you what's going to happen in the future, but you can have a good indication. So historically speaking, when they're underperforming, silver is doing even worse than gold, right?
Yeah. You want to show that chart?
I did. Probably you were aware.
Okay.
No problem.
Let me ask this. Robert Dunn, are you in the house at Trader Goalie 1? I've been trying to reach him. So to me, it looks like if you do put out a question, because I can't find you, haven't responded to Twitter. So I don't think we're going to have a guest today, buddy.
It's okay. It's absolutely okay.
Usually I have time to, seek a replacement. I didn't have time today.
Absolutely. Don't worry about it. I mean,
Okay.
This happens to live shows, right?
Yeah. I've been ghosted. That's a modern terminology for
that is
someone.
indeed a modern terminology.
Isn't it? Where you have a blind, you're supposed to have a date. Maybe it's a blind date, and they don't show up. Is that what ghosted is?
I think so. Yeah.
Okay. Anyway,
it hasn't happened to me. Yeah. So let me say something else. Just in we were talking about the euro, and I said that if I had to do something with it would be being short. Although I'd rather do nothing. I have to say that more or less the same applies to use the Swiss. As you see, it's in the middle of this larger formation. But I do think that the USD Swiss is much better looking from a technical perspective. So I have to say that, if you want to be long against Thursday's lows, it makes sense because this move lower doesn't look strong. And if for some reason we make it up here in this confluence of resistances up here, just below 102, and we actually break above it, I think that's going to be a very bullish development. So I think that USD Swiss is going to be, a very nice long if we make it above there. I would rather be looking in doing something with that than in the Euro USD, regardless. And one more thing, I know that Blake is two more things actually. I know that Blake was long the USD CAD and he did, very well. It worked out for him beautifully. I have to say though that I would be a little bit careful here for the reason that, as you see, we're currently testing this confluence of resistances, these triangles resistance, the 50 daily moving average, and this has also been a horizontal support resistance area. So before you look for further upside, let me also say here, and Blake has pinpointed this, that this, you can interpret this as a triangle, but you can also see it as an inverted head and shoulders formation. It doesn't really matter because this trend line in this case is the neckline, right? Yeah. So definitely 133, this 133 area, 133, 133.10, quite a key area. If we break above, I think it looks good for a move towards 136. But if we get rejected from here, be careful because we might even have more downside. So, I would be still careful here. And having to do with USD NOK, Blake said that it's breaking to the upside. I totally agree. Don't forget that we had mentioned several times that USD NOK, and I had told Stelios that, that I would be very careful being the USD NOK short. Why? Because USD NOK has exactly the type of technical view that the Boon has after a very, very long-term corrective move in a large channel. We actually broke above it. We came down, we retested it twice, we found support there. And, this is the long-term view. You should not forget that, right? As long as we remain above this, you have to respect the potential for, a decent more upside. So I do think that if you're looking for medium-term opportunities, buying USD NOK as long as we remain above, let's say, 840, is the way to go. Only if we break down below 840, we can start talking about the possibility of a false break higher and a bigger reversal. Okay.
Hey, Steve,
Hi, Steve.
Can you wrap it with a VIX look and then go to?
Absolutely. Absolutely. But first, let me cover.
Yeah, go ahead.
We have a friend.
Nice Ethereum trade. I heard you got out before the Sunday debacle a week ago.
Oh, I got out since I was in Germany from half of my position, so I booked up very nice profit, but I am keeping half. Why? Because this is what I'm looking here. I'm looking here for a potential. Let me show you.
I agree.
A, B, C.
Yeah.
So I want to, I want to keep half of my position, and I would like to reload anywhere between here and there, some of it for a potential continuation higher, and no need to go to Bitcoin. It has the same type of dynamic. Okay.
They all do.
Yeah. Now, let me. You said about you mentioned the VIX. Let me show the VIX. VIX.
I know there's some divergence down here at new lows, but I was wondering. I wanted to see your chart. Okay, you have, your lines ended up meaning. Yeah. See, I had that line too. Okay, you're adjusting it now. Okay.
Yeah. This is the 4-hour chart, so it moves quite fast. Okay. It looks to me some type of
wedge.
A wedge here. Yeah, on the 4-hour chart. And if we go to the daily, let's go to the daily VIX. Here it is. You can see more or less the same thing here. Okay. So I think we had,
I certainly wouldn't be short volatility here. I don't know if it's a tough buy down here, but anyone, people have short memories on that big explosion that we had last year. People went broke being short volatility. So, it's in, so it's like picking up nickels off the sidewalk. It's so easy most of the time, but then the steamroller comes and your account is gone. So caution.
Yeah, and as I've said before, and I have to say that nothing has changed with my viewpoint. I totally mean it. Nothing has changed with my viewpoint. I think that the period that we're not going to see again, the period that we had those couple of years that volatility was hitting single digits all the time, and everything was quiet, and the markets were slowly drifting higher. A little bit every single day, and a little bit more, and a little bit more, and the market was extremely boring. We are seeing something that resembles that lately, but I think that it's more or less going to prove to be
a
trapdoor. Yeah, I do believe it. I do believe it. I
Okay,
believe that now that the Fed has raised.
Thanks for giving me hope.
Yeah. I believe that 2019 is going to prove to be a very interesting year. I strongly believe it. And I know that we've had, a big period of this year so far being boring. But I strongly believe that this is going to end up being a very, very interesting year.
Hey, anytime you come to face, it's an interesting year. That's, and that's a completely objective opinion. So who thought today was interesting? Give me a why. How about every day? All right, cool. So you're through, Steve? Is that it? Any other questions?
Well, no, I think I've covered everything. So we'll, we'll be back tomorrow.
We'll pick it up tomorrow, and I'm seeking a replacement for tomorrow too. It's one of those weeks. So anyway,
it can happen.
Yeah. Anyway, great to be relocated. Looking for this move. And anyone else who's had to go through a transition, there's many transitions we have to go through. Change is it's ever constant. And let's make changes for the good. And if you're really serious about trading FX, one of the best changes you can make is to be in our chat room after face closes now and just transfer over there, or be in both during the hour, and be in Paulie's European crossover, so that you're prepped to execute and not analyze on the fly. And also a change might be a broker. Maybe you're not happy with the fills. Maybe you're not happy with the spreads. Maybe you don't get a rebate. You need to call our sponsors at Forest Park FX and talk to Justin. Introduce yourself. Make a phone call. Steve himself hadn't done it for a long time. He's now a client of theirs, and he gets a. How do you think he can afford to fly from Greece to New York? It's his rebate check. Would that cover the airfare, buddy? Steve? All right. Anyway, he's gone for my rant. All right. You're very welcome, Marius. Everyone have a great day. Stalin, Have a good day in the gulag, and everyone else, and good hunting. And most of all, don't just count your pips, count your blessings. See everyone for Turnaround Tuesday. Thanks for your attention. Adios.